Hello, in this presentation we will compare QuickBooks Online, QuickBooks Desktop, and Excel. Hello, in this presentation we will record the receipt of a payment within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We will be entering a customer receipt payment. This is going to be a payment that we received from the customer. Typically, this will happen in the format of we got an invoice in the past or sent out an invoice for something that happened, in our case, the sale of a guitar. And now we are receiving payment, possibly in the mail, for the invoice that was sent out. We need to record that receipt of the payment. We're going to do that by going to this little icon up top, the plus icon. This will give us a short window of many of the common transactions with the grouping of customers, vendors, and employees, and other. We're going to be in customers over here, and we're going to have the receipt of payment. So it's going to be this item, receive payment, and we will see this screen. So we're going to have receive payment, and we're going to enter the data within here in terms of the payment received, starting with the customer that we are receiving from. Remember to look at these forms and know what we're actually doing with them. When we say it's a received payment, that means that we're getting something, some kind of money, sometimes of cash. Now, we could put that directly into the checking account, or traditionally QuickBooks puts it into this Undeposited Funds account, but it will increase the cash account in either way. The other side of the transaction then typically will be going to accounts receivable, reducing that account that represents the amount of money owed to us from customers' accounts receivable. So we're going to say that we received the first payment from Anderson Guitars. We can select the drop down here, and we can start typing to autofill it. Anderson. There it is. We're going to select Anderson Guitars. Going to tab through this as we normally do. The date is going to be 01/12/21, and the payment method, we can choose the different types of payment methods. We're going to say that we have a check here, could be cash, could be credit card, and then the reference number, this is going to be optional. We don't have to have a reference number. I'm going to put 8755 for the reference number. Now the deposit, it's going to our checking account here, and what you want to be careful with the deposits. One, because we need to do the bank reconciliations at the end of the month, and we want to deposit in the same way that they're going to appear on the bank reconciliation. And two, as we have the cash right now, it's not really in the checking account. So there's a bit of a time delay if we say it's in the checking account now. We're going to try to do what typically will be done within QuickBooks, which is to group them in this account called Uncategorized Assets, sometimes called Undeposited Funds. And that'll be the holding account that we're basically going to use to hold this asset account until we go to the bank and make the deposit, in which case, at which time, we'll take it out of here and then put it into the bank in a deposit. That will allow us to group multiple checks. So for example, if we got 5 checks today and we went to the bank at the end of the day, we can group all those deposits together and see them in one deposit as they would be seen on our bank statement, helping us to then group the bank statement and match it out to what we have in our system, which is really, really important. We want to be able to say, hey, is there a problem here? Did this deposit clear? And it's a lot easier to do that if we have the grouping the same in our system as in the banking system. So we're going to have that be the item here. Then we've got the 2 invoices that are outstanding. If we check on one, we're going to say that this is the one that we received payment for. So these are invoices we made in the past. If we click on them, we'll go to that invoice. But we are receiving payment now in the mail for one of these invoices. If we click on this item, it'll automatically populate the amount. So the amount is up here, matches the invoice. If they paid us less than that amount, then we can put an amount less than that amount, and there will still be amount outstanding due on this invoice. Here we have the full amount paid, and the invoice will be completely paid off after this has been recorded then. So just a recap, once we record this, what's going to happen? We're going to increase not cash, kind of cash, but not the checking account going into the uncategorized assets, which we will then put in the checking account when we deposit it. And then the other side is going to be decreasing the accounts receivable account for, in particular, Anderson Guitars. So we will go ahead and save this item and then see what the impact will be on our reports. So I'm going to close this back out. We're going to close this out up top with the X. We're going to go to the reports, which is going to be on the left-hand side, and go to our main reports. So let's select the reports. And then we are going to look first at the balance sheet. So we'll go into the balance sheet here. We're going to change the date to the dates that we are working on, which will be from January 1st, 2017, no, 21, January 1st, 2021 to 01/31/21, January 31st, 2021. We're then going to run that report. And there we have it. Now, if we scroll through here, the first thing we have is going to be this uncategorized asset. That's where we put this asset at this point until we then categorize it and deposit it into the bank. So if we select that item, we have the uncategorized asset here. We have the amount of the 5,000. If we select that to 5,000, then we will go into our payment receipt. So there's going to be the one side of it. If we close this back out, we'll go back to the balance sheet and we're going to scroll back up. We're going to go back to report summary, back to the report summary. And we're going to look for the other side of this transaction, and that's going to be in accounts receivable. Someone owed us money. They no longer owe us money. So we're going to go into this 16,329, and then we'll see this sales receipt or payment here, right there, and the payments for the 5,000. If we click on that, then we see the receive payment here once again. Hello, in this presentation we will enter two receive payment amounts into QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses, and a QuickBooks Pro desktop version course you can find at the link below. Here we are with QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We will be entering two customer receipts. When considering the customer receipts, we want to make sure we know where we are at, and that is that we issued an invoice in the past. Now we're receiving payment on that invoice. The invoice basically saying, hey, we did work, in our case, gave a guitar, delivered the guitar, and we expect payment in the mail. We are now receiving the payment, and we need to record that receipt of payment. To do that, we're going to go to this plus icon up top. This has most of the quick forms that we will be needing in order to enter data. We have the customers, the vendors, and the employee sections. We will be under the customer section, and we want to go down to the receive payment amount here, or receive payment item here, and we'll select that item. And we're going to go through here and enter the simple data through here. Make sure that we want to focus in on what's actually happening in terms of the financial statements as we do this. The receive payment means we've got some kind of payment, cash, check, credit card. That means we got money. Typically, we would think of the checking account going up. However, we're going to put it into an other account, in this case, an uncategorized account, that we will then deposit into the checking account as we group them together. And the other side is going to be decreasing the accounts receivable for the customer who has now paid us, who now no longer owes us, and therefore the account representing them owing us money, accounts receivable, is going down. So we're going to get money. We got money from Jones Guitars, and that's what we're going to be issuing or recording here. We're going to select the drop down to find Jones Guitars, and then we could also type it in, and it will autofill and select Jones Guitars. And then we can tab through this information. We're going to have the date here. The date's going to be 01/12/21, so January 12th, 2021. The payment method could be cash, check, Visa, or a credit card. We will select the payment method of cash, We're not going to have a reference number, and instead of going to the checking account, which we could have it go directly to the checking account here, we're going to put it into the uncategorized asset. And then once we go to the bank, we will then group all of our deposits together and put them into the bank at the same time. We then have the amount received over here. We could populate that directly here, or we could go down to the invoices and select the invoice we'd received payment on, and it will then auto-populate the amount up here. So if we received payment for this invoice of $7,500, then we can just select this item. It will auto-populate the amount that we received. It will then populate it here as well, saying that we have received full payment on this invoice. If, however, we received something less than full payment, we could put something less than full payment here, select this invoice, and then we'll still have a payment remaining due on this invoice. So that's going to be it here. Let's remember what happens when we record this. We had an invoice in the past that put information or an accounts receivable representing the customer owing us money and sales. We now got the money, meaning cash went up, but not in the checking account yet. Therefore, we put it into undeposited funds so we can group them at the end of the day and then deposit at one time. And the other side is going to reduce the accounts receivable for Jones Guitars in specific. We're going to save this and go to a new one, enter another one, and then we'll go to the reports and see what happens to the reports. So save and new, green icon down right hand side. We'll do this one a bit quicker this time. We're going to say the customer. We can say the drop down for the received payment. Type the customer in there to autofill. We're going to say it's Smith Guitars, so we will select Smith Guitars. Tabbing through this, we see we have the date, January 12th, 2021. We are going to have the payment method, which this time will select a check. It's going to go into the uncategorized fund again, rather than going directly into the checking account. We have the amount, but once again, we're going to select the invoice down here. We have an invoice outstanding for this particular client. Note that we had to put that client in order for it to then generate this invoice that we had entered in the past for that client. If we then select that invoice, then it'll give us the $8,000 here, put that amount in the received payment. Once we save this, then it's going to increase cash, but not the checking account, in uncategorized assets, which we will then deposit, hopefully at the end of the day, put it all together, deposit it at the same time in the same amount, which will then be on the bank statement, allowing us to reconcile our cash account to the bank statement. So we're going to save this, and then we'll go to the reports and see what happened. So we're going to say save and new, and then I'm going to close this out with the X up top. Let's go to the reports. Reports are on the left hand side, so we're going to select the reports. We're going to look at our normal reports we always look at, which will be the balance sheet, the financial statements, more specifically being the financial statements. And the dates then up top, we're going to say are 01/01/212, 01/31/21, January 1st, 2021 to January 31st, 2021. Let's go ahead and run that report. So here we have the report ran, and we're going to scroll down and remember that we put the money, we got money, but we didn't put it in the checking account because we haven't gone to the bank yet. We will do that shortly. What we did do is put it into this uncategorized assets. We have that much, $20,500 there. We should really go to the bank soon. That represents money that we have just in our store right now that we haven't yet deposited into the bank. We're going to select that item, and then we see the items here. So we had Anderson that we did that last time. We've got the $8,000 for Smith and Jones 7.5. If we select either one of these, that will then take us to the receive payment form that we just input. So we will close this back out. Take a look at the other side of the transaction, scrolling back up, going to the back to report summary, and we will then find the other side, which was accounts receivable. Here's accounts receivable. If we select this item, it should be going down by the fact that we received payment. Accounts receivable representing the fact that people owe us money. Once they have paid us, they no longer owe us, and therefore it should be going down. So here we have the 8 and the 7.5. Selecting either of those, we see the received payment. Hello, in this presentation we will talk about the receipt of payment and how to record it within the software of QuickBooks Pro 2018. If you have been following along with us, we will be continuing here with the Get Great Guitars. If you have not and just want to know how to record the receipt payment, that is okay as well. That's what we will cover here. If you have the backup and would like to restore directly to this point in time, then the way to do that is to restore the backup with the File tab and the Open and Restore. We are entering data as we go here, so we're going to be relying on past data and continuing on with future data, hopefully getting to the same point at the end of this. So in order to move forward, we do need some data to work with or to have some conceptual idea of the data that would be in place, meaning what has happened in the past and what are we doing now, why are we doing it, and what are we expecting to happen in the future. As we look at that, a good tool to visualize that is, of course, the home page, which is where we are now. If you're not here, you can get here by going to the Company tab and Home page. I also like to have the open windows open. Notice that they're not here at this point when you open the program. So I'm going to go to View and Open Windows so we can see what we have currently open. Note that shows me we have a lot of stuff open, or I do, that I don't need open. I'm going to go ahead and close these out just so we can start just with the Home tab. So I'm going to clean everything out here, and I recommend doing this a lot of times when you're opening QuickBooks, just so you're starting from one point and working from there, so you can have the relevant information open in your tabs. Now we just have the Home tab open. We are going to be working with receiving payment. So the concept here is that we billed someone or we invoiced someone and we expect to receive payment. We can imagine receiving that payment in the mail. So we can see that flow within the customers section. So within a customer section, typically if we are in a business where we do the work and then get payment in the future, then typically we're going to have an invoice, then we're going to get payment, and then we're going to deposit it. So we need to have a picture or an idea of those three components as we build the accounting system, as we build what we're going to be putting together and how this information is going to flow through. Our project is going to be a store, so we buy and sell guitars. So oftentimes if we were to sell the guitar within the store, we would create a create sales receipt and not an invoice, in that we would hopefully get payment at the point in time that we sell the guitar, and then we would just deposit that information. If on the other hand we got paid, or we sold the guitar and we expect to get paid in the future, this would be a type of setup that we would expect to see more in a lot of service type organizations, a law firm or a bookkeeping firm, where the work is done, you send out the invoice either by email or by mail, and you expect to receive a check in the mail for that. You have to first, in order to send out the invoice, you got to count up the time and whatnot that was spent. In that case, we would typically have the invoice going out and then receive payment at a future date, and then we're going to record the deposits. That's what we're going to work on here. We're going to say we had created the invoice, and now we're going to get a payment. If you want to know how to create the invoice, we did that last time. We created a couple invoices. We're going to create a couple more in the future. And now we're going to take the payment that we're assuming has been received in the mail. We got a check in the mail, and we're going to record payment. Note what we are not doing. We're not recording deposit here. So we're going to record payment first. There's a few reasons for this that we need to understand because it's a bit different than we might learn in accounting courses, where we basically skip this middle step. What we normally do is we say we go into accounts receivable. People owe us money for work we did. We record sales and accounts receivable with the invoice. And then we just get the cash or the check, and we debit the checking account or cash, which in our case in QuickBooks would be the checking account, increasing the amount of cash we have. And we would credit the IOU account, the accounts receivable account, reducing the amount of money owed to us. The reason QuickBooks has an added step here is that we might get multiple checks within one day. And our goal is to deposit all those checks at the end of the day, or deposit them regularly. As we deposit them, we're going to group them together, not by individual check that we have received, but by groups of checks, by deposited checks. And therefore, we need to be able to put the deposit into our system in the same format as the checks, so that it ties out to what the bank statement says. When we compare our information within the bank reconciliation to the bank statement. A lot easier if all the deposits are grouped in the same way as they are on both the bank statement as well as QuickBooks. So what we need to do here is have an interim step. We're going to say these are all the checks that we are holding on to, and we're going to put them into a different account called Undeposited Funds, and then we're going to go ahead and deposit them, then grouping all those checks together in the same format that they'll be seen on the bank reconciliation. So that's the crucial step. It's a step that's really misunderstood, gets messed up all the time, and there is a purpose to it. There is a way that we can bypass that middle step, but it's worth doing for many businesses. So let's take a look at it. So we got a check in the mail. We issued the invoice. Now we got the check in the mail. We're going to say receive payment. The check in the mail came from Anderson, so we're going to say the Anderson is who gave us the check. If we type that in, we'll then get the individual. We can also select the drop down and find our list of customers and pick the customer. And there we have it. Now, what drops down here is the information in terms of what Anderson owes us, and we could just check that off. Note, it's kind of a double check here if we were to write in the amount of the check that we're holding, that we got from the customer, and then match it out down here. If we were just to select this item down here, we got a 5,000 check, it fills it out automatically up here, and it gives you a little message in order to tell you that. If you do not enter the amount received, QuickBooks automatically calculates the amount as you select each individual in the table. So I'm going to say, okay, so we selected that and it put the amount there. That hopefully is the amount of course, the check. So we're going to say we got a check in the mail. We'll label a type of payment. The date that we got this is going to be 01/12/21, that being January 12th, 2021. We will be working this problem in the year of 2021. And the check number, it's optional field. You don't have to have it. This isn't our check numbers. These are the check numbers from the individuals giving us the check. We're going to type in 8755 for the check number. When we record this then, what's going to happen is we're going to say the receivable should go down from Anderson because they paid us. And where does the other side go? You might think that it should go into our checking account, debiting cash or increasing cash. But it's going to go into this undeposited funds, and that's what we're talking about. It's going to go in there first, then we're going to group the deposits, and then deposit them as a group sum. If you want some more detail on that, you can. This little icon gives you a description of that. It's going to be deposited into undeposited funds. We'll take a look at it. If you want to turn off that preference, and if you want to deposit it directly into the bank here at this point, then you could go into preferences here and follow these instructions and turn off that preference, and when then you deposit here, it would go directly into the checking account. So I'm going to go ahead and save and close this, and we'll take a look at what happened. So remember, we received payment, so we would think that cash would go up in some form. It's going to be undeposited funds, and the amount owing us money would go down. Those two items on the balance sheet. Therefore, let's take a look on the balance sheet. We're going to go to Reports. We're going to go to Company and Financial. We're going to scroll down to the balance sheet and the standard balance sheet. We're going to change the date to 12/31/21. I'm also going to change the date range over on this side, so I'm going to customize the report. So whenever we auto zoom or drill down on the information, it will then give us a range of dates as we look at the transaction report, or in essence, the general ledger. 01/01/21. So we're going to say OK. And then we can take a look. So we're going to say cash, probably not going to be the amount that was affected. What is affected, and they put it down here not into cash, they put it into other current assets. So this undeposited funds is in essence cash we have on hand that we have not yet deposited. So if we double click on that, we see there's our item here from Anderson, the other side being accounts receivable. If we double click on that, we see the actual customer payment that we just filled out. So I'm going to close that out. Close that out. The other side of it then should be in the receivable. So we'll double click on the receivable, and we see there's the 5,000 that was paid for the receivable here. So there's the other side. If we double click on it, we see that same customer payment. So I'm going to close that out. Going to close that out. One more important report that this will appear on is the customer report, the accounts receivable, the subsidiary report. So we're going to go down to Reports, Customers and Receivables, and we're going to go to Customer Balance Detail. And then we can see again, Anderson here, we have the 5,000 was owed, 5,000 then paid, and now Anderson only owes that 430, and that is what is now remaining. If we double click on this payment, we will get back to that information, same form we filled out, same customer payment. So at this point in time, we have this account which looks really funny on a financial statement because it's only something that you really use in QuickBooks, and therefore what we need to do is get that into the checking account. If you have a bunch of amount in here that's not in the checking account, then there's probably an error, and that happens a lot. So there's probably something that you got to go in there and clean that out. If you reconcile the checking account, then you can be fairly confident the checking account is correct. If you have, say, 5,000 in this account, and you have no checks that you have plan on going to the bank and cashing anytime soon, then that amount is probably incorrect, and you got to figure out how to fix that. We're going to go back to the Home tab, and we're going to receive another customer payment and receive it from Jones Guitar. Same concept, already invoiced. Now we're going to receive the payment. So we got the check in the mail. We're going to say received payments. When we get that check in the mail, we have to type in from the received from the client or customer of Jones. So I'm just going to type that in there. It will then populate Jones Guitars. And then we're going to put the amount or the information or the payment type. I'm going to say this time we got paid with a credit or debit just to see the difference there. I'm not going to enter the payment information at this point. I'm just going to show that we have a different information. This will give us basically a reference of the payment type here, and I'm going to say done, and there we have that information and the amount. Then again, we could type it in here, or we can put that information down here and just click on the related invoice, this being the 7,005. It gives us that message that it will populate the payment amount for that same amount. We're going to say okay. That is good. So this number should match this number. Note that if a payment was received for less than the invoice amount we are applying to, that's okay. You just make this number less, and then there'll still be an amount due. Notice we have two amounts here, the original amount due, and the payment amount. We have three amounts here, and the payment amount. So if we only have a partial payment, that is okay. We're going to say we paid the entire invoice of 7.5 that was on there as of 12/31, our beginning balance for this particular problem. And we still have this invoice on January 12th that we need to take care of at a later point. Once again, what will this do? It will decrease the amount owed by Jones in the AR accounts receivable account, and that'll put an amount in undeposited funds. So we're going to say save and close for this item. And then once again, we'll take a look at the balance sheet. It says it needs to refresh. I'm over here in the Open Items tab. We're going to say click on that. And once again, it's not going into cash. Where did it go? It went into the undeposited funds. If we double click on it, we now see that item there. Double click on it. We see our payment. Close it out. Close it out. Other side in the receivables here. And there it is again. So there's our payment, double click on it, and we see the item. So those are two sides. There's our double entry accounting system in practice. Here's our balance sheet equaling out in terms of assets still equaling liabilities and equity, which is a good sign. If we take a look at the last report we looked at in terms of the customer report, reports, customers receivables, and we have the customer balance detail. Customer balance detailed for Jones, showing once again that payment of $7,500. Double clicking on that, we see our customer payment, and there is that. We're going to do this one more time. So I'm going to close this out, and we're going to go back to the Home tab. And now we have another customer paid us. This has been a good day for payments here. Smith Guitars is going to pay us, and therefore we already invoiced. We're receiving a payment for that invoice. Note that these two are related, of course. This information that we are getting within the received payments generated from the invoice that was created. So we're going to go into receive payments, and this is going to be from Smith Guitars. So I'm going to hit the drop down this time and just pick Smith. There we go. and we're going to tab through this. I'm going to say payment is for that $8,000. Now I'm just going to type on or click on it again. That's our beginning balance that was owed to us from Smith. The credit card is still selected. I'm going to keep that. And notice that when we put the credit card information at this point in this format, it's really just a reference. So we're recording the payment that had been received through the credit card into our system, mainly tracking the fact that Smith doesn't owe us money anymore. That's the main thing that QuickBooks is doing here, and recording the deposit tracking the cash that we have then received. So that's going to be the same information. We have this information here. Once again, it's going to increase the undeposited funds and decrease the receivables related to Smith's guitars. We're going to save and close that. We will check it one more time on the balance sheet. We see that we have a accounts receivable, and accounts receivable is going down once again. So the account receivable is going way down this day. And we're going to close that out. And we're going to go to the other side of it, will be in undeposited funds, and there we have that. So now we have this big number of checks in undeposited funds. We should be going to the bank very shortly if we have that information there. Note we're going to deposit it into the bank, and our goal when we deposit it into the bank is going to be to group it in a format that ties out to how it will be grouped on the balance sheet on the bank statement when we see the bank statement. Because what we want to do is tick and tie out when we reconcile the bank statement what we have in our books to what is in the bank statement. Easiest way to do that is to group the deposits in the same format in both locations. We will do that in a future presentation. Hello, in this presentation we will record the transaction in our bookkeeping Excel problem for the receipt of payment from a customer, comparing and contrasting to a process that may be done in some accounting software like QuickBooks. This is the second time we're going to work through the receipt payment. We're going to go a little bit faster, so for more description you can take a look at the prior presentation on the receipt of the payments. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to have this information first looking at what could be done in accounting software such as QuickBooks, then move to Excel, recording the transaction into the Excel process, providing more detail. If we were in something like QuickBooks, then we would be saying we're going to receive payment from the customer. And that typically means that we have already issued an invoice. In this case, we issued an invoice probably for a guitar at this time, and now are receiving payment for that, meaning we're getting a check in the mail possibly, or some type of payment form. And we're going to look at the transaction related to this. In QuickBooks, we would just click on that item, and all we would have to do then is select the receivable who we're getting the item from. And then it will say, hey, these people owe us an invoice. Is this related to one of these invoices that you have priorly input? And we would select the one that it is related to, and that would populate the amount, or we can populate them out separately. And then we would put the date here of the receipt payment, the form of receipt, and in this case we chose the Visa here, and that would then match this out. So the fact that we have the customer payment means accounts receivable typically is going down. The amount that customers owes us goes down, and the other side will be, you would think, cash, but in this case it's going to go to that undeposited funds, that holding account, that account used for holding until we actually make the deposit in a grouped deposit. This is the type of transaction we may not fully see when we enter the data here. This is the transaction needed in order to create the financial statements. This is the transaction we'll see in more detail as we record it in our Excel workbook. Here is our Excel workbook. We're going to record this transaction related to the receipt of payment, and oftentimes if this was in a textbook we would say something like we received payment on account. And that means that we got money, so we got cash typically, but note we don't have just an account called cash here, we got checking account, and it didn't go in the checking account yet. It went into we're just holding on to it. We're going to put it in the checking account at the end of the day. And right now it's just an undeposited fund. So we're going to have this added account added to what normally we think of just thinking of theory, because we're breaking out this cash account to separate accounts, in this case the checking account and the undeposited funds. The point of that meaning is that we are then going to go and deposit those funds into a group, and when we do so, we will have it grouped together, and that'll help us to track the cash and help us to reconcile the bank accounts. So what we're going to do is going to increase the undeposited funds. It's a cash account. It has a debit balance. We're going to increase it by doing the same thing to it, which in this case is another debit. So I'm going to copy that. We're going to scroll on down. We're going to go to 112. We're in the same date here. It's going to be the same transaction as we did up top, except the amounts will be different. So we're going to select paste special, or paste 123. It's going to be 7,500. And it will differ when we record this to the subsidiary ledger. So remember that as we record it here, we'll also need to record it to the subsidiary ledger, and we'll see that process. So then we're going to have a negative 7,500 as well. I'm just going to say negative of that number, and that's kind of like the plug formula. A shortened version of the plug formula just gives us what we need to be in balance. I need that times -1 if there's only 2 accounts, and that other account then will be accounts receivable, because we got it on account. We didn't earn it this time. We got paid for something we did in the past, and we're tracking the fact that people owed us money. That $16,330 is what people owe us. We have now been paid. It then needs to go down. This is a debit. The way to decrease it is to do the opposite thing to it, in this case a credit. So we're going to copy this account, scroll down, put that in cell G23, right click and paste it 1, 2, 3. We'll then go to the Home tab. We'll go to the Alignment group, and we will indent this information there. Then we'll go through and just post this out. This is called recording the journal entry, or journalizing the journal entry in the general journal. And then we'll go through the process of posting this to the general ledger over here, which will then be used to create the trial balance. So here's the undeposited funds. It's right there. It's right here on the trial balance, and will be in the same order on the general ledger. So we're going to scroll over here and look for that. Well, before we do that, hold on. I'm going to scroll up top. We're going to freeze the pane. So I'm going to put my cursor here on AJ1, go to the View tab, and then go to the Windows group, and then freeze the panes. By the way, the reason we do this every time instead of just always having the panes frozen is so that you don't just look at the worksheet and start maneuvering it around and it looks funny. So we want to be able to click that and say, this is why it's starting to look funny, meaning this is why when we scroll over this way, those first cells will remain. And then we're going to scroll down. We're going to look for that undeposited funds, which is right here in AU23. So within AU23, we're going to say that equals and just point to that 7,500. When we do so, the undeposited funds will increase to 12,500. Just going to scroll that back with the left arrow, scrolling back. If we scroll then up, we see the undeposited funds there as well, 12,500. We see we are out of balance here, and we need to record the other side, that to accounts receivable. Accounts receivable is going to be the second account here. It's going to be the second account on the general ledger as well. We want to record this right here in the accounts receivable. We're going to be in the credit side, so we are in cell AR12. AR12 equals, and then we're going to point to that 7,500. That will bring the 16,003 balance down to 8,830. If we scroll back over to the general ledger, we see that balance here, 8,830, and we see that we are in balance down here as well. Other thing we have to do, remember, that is we recorded this into the receivables. The receivables up here represents what is owed to us. We need to reduce that to not just to the general ledger account, recording the receivable by date of transaction, but also to the subsidiary account, recording who owes us this money. In essence, just recording the same information but in a different ordering, in this case in ordering by customer. So we're going to scroll back over. We're going to scroll back over all the way over till we get to the subsidiary ledger. We're going to see green items again at some point. So here are the green items. Here are our customers, and we have Jones here is the one who paid us. That's nice, because we're going to say that we have this credit, and we're going to say it's the same credit. This same thing is being recorded. It's just like we're posting it to the general ledger, and it's just like a different general ledger that's just in a different order. And we're going to say that that's the $7,500. So Jones no longer owes us that and is down to just owing us that $399 from that second invoice that we had input. And if we were to add up all those amounts then for the people that owe us money, the customers that owe us money, it comes out to $8,830. That then should also be found on the general ledger. I'm scrolling left to see that that is the case, that $8,830 is on the general ledger, as we hope it will be. There it is right there, $8,830. Also found on the trial balance, $8,830. We are back in balance, I believe. We already checked that. Yes. No effect on net income with this transaction. Note, nothing in the sales, nothing in the expenses. And even though we got cash, undeposited funds, because we earned the revenue in the past and recorded it in the past in accordance with the revenue recognition principle. We're going to go ahead and unfreeze the panes now. So I'm going to go to the View tab, Windows, Freeze Panes, Unfreeze, and then just check out the financial statements. So we messed with this account. We made some changes to it. We fixed it. We didn't mess with it. We fixed it. And then we went here and we did something to that account. So if we were to generate the financial statements, I'm just scrolling right all the way to the right. We could then automate the financial statements, pretty much set up automatically here. There's the change to the undeposited, which again, probably should be included as part of cash, but just breaking that out so you can see the separate line items that will be in cash once we deposit the funds. And then we've got the receivables here. We've got our total assets and our total liabilities and equity. No impact from this transaction on the income statement here. There's our net income, and here's our statement of equity, the ending balance here being the same as the balance there. And that's this information.